A very common question these days: how do I get started with investing? What do I invest in? And where do I even begin? Before we discuss any further, let me tell you why it is so important that you invest your money rather than save it. Over time, inflation erodes the purchasing power of cash. In other words, the cash you have been sitting on does not buy as much as it used to because everything has gotten 3% more expensive. Now imagine the effects of inflation if you look at the bigger picture rather than just year by year. As you can see, in 70 years, $100 lost 91.3% of its real value. Investing allows people to grow their money. The objective is to purchase an asset or investment that the investors can sell at a higher price in the future to yield a profit. Some examples of investments are stocks, bonds, mutual funds, real estate, and so on. In this video, I will discuss investing in the stock market only. First, a few investing basics for beginners. How much money do you need to start investing? Not a lot. In fact, it's mathematically proven that it is better to start small than to wait until you have more to deploy, even if you try and play catch up down the road, thanks to the power of compound interest. What to invest in? Well, there's a lot of things you can invest in, but we will discuss about investing in stocks, or at least investment vehicles that provide exposure to the stock market. The stock market is a place that will deliver one of the best long-term returns on your money. How to buy stocks? All this advice about investing in stocks for beginners does not do much good if you don't have a way to actually buy stocks. To do this, you will need a specialized type of account called a brokerage account. Brokerage accounts are generally easy to open. A popular account these days amongst younger generation is Robinhood. I personally use Schwab and I'm quite happy with them. Once you have a brokerage account, you can pick from hundreds of businesses that you intend to invest in. The secret to making money in stocks: stay invested. Time and temperament are the keys to investment success, so says a guy you might have heard of named Warren Buffett. Now that you know a few basics, the next question is, what stocks and companies do you buy and invest in? It is a good idea to learn the concept of diversification, meaning you should have a variety of different types of companies in your portfolio. A good rule of thumb for beginners is to buy stocks in businesses you understand. Buying flashy, high-growth stocks may seem like a great way to build wealth, and it certainly can be, but I would caution you to hold off on these until you are a little more experienced. It is wiser to create a base of your portfolio with rock-solid and established businesses. In this example, I'm buying one share of Starbucks in my brokerage account. I like Starbucks as a long-term investment because it is a well-established business with a proven history of dividend growth. However, instead of picking individual stocks, what if I told you there is an easier way? Exchange-traded funds, or ETFs, is another way you can invest in the stock market and make your money grow. A well-known ETF is the SPDR S&P 500 ETF, also known as SPY for short, is one of the most popular funds that aims to track 500 large-cap and mid-cap US stocks. The S&P serves as one of the main benchmarks of the US stock market, and it indicates the financial health and stability of the economy. In simple terms, if you buy one share of the SPY ETF, you are essentially holding a small piece of all these 500 companies. Here's another one, IEUR. This ETF tracks some of the biggest European companies. So if you buy this ETF, you're essentially holding a small piece of all these European companies. Similarly, there are other ETFs as well, some that track the stock market, while others track currencies, bonds, and other instruments. Research these ETFs and see which one fits your investment needs. Here are a few that I have personally invested in. You buy these ETFs the same way you would buy any stock. Go to your brokerage account and pick the quantity you would like to buy. As a beginner, it may not be a terrible idea to start with the very basic ETF, the SPY ETF. Consider buying both individual stocks and ETFs in your portfolio to keep a good balance of growth, diversification, and minimum risk. My personal portfolio is a mixture of both ETFs and individual stocks. Next, let's plug in some numbers and see what is realistically possible over time if you invest often. If you start investing with an initial $5,000 and contribute $100 weekly at a 10% annual rate of return, in 20 years, your investment could be worth $345,000. If you extend the timeline further, in 30 years, your investment could be worth just shy of the $1 million milestone. Let's take another scenario. You start investing with the initial $10,000 and contribute $50 weekly. At a 10% return, in 20 years, your investments could be worth about $225,000. If you stretch this to 30 years, you could be looking at $620,000. I've linked this calculator in the description box below. Make sure you play around with it and see what is possible if you invest consistently. Here's one of the biggest secrets of investing, courtesy of the Oracle of Omaha himself, Warren Buffett. You do not need to do extraordinary things to get extraordinary results. The most surefire way to make money in the stock market is to buy shares of great businesses at reasonable prices and hold on to those shares for as long as the businesses remain great. If you do this, you will experience some downturns along the way, but over time, you will produce excellent investment results. There are other investment tools as well, like real estate, the bond market, mutual funds, and even cryptocurrencies these days. I will discuss all those in another video. The intent of this video is to get you started as you learn along the way. Lastly, if you're into reading, make sure to check out the following books.